We'll go ahead and get started on this week's Salt Bitcoin review. For those that haven't been on yet, I'm John Darcy. I'm a director of business development here at SkyBridge. I'm also the managing director of SALT, which is our conference and thought leadership business. We're very excited to resume our conference in September of 2021 here in New York City for the first time. Crypto, digital assets, Bitcoin will be a huge part of the agenda. We already have some fantastic speakers and sponsors lined up in the Bitcoin category, so very excited for that. So if you're tuning into these, we would highly recommend that if you feel safe and comfortable doing so, we'd love to have you at SALT in September. But joining me on today's SALT Bitcoin review is Anthony Scaramucci, who's the founder and managing partner of SkyBridge, and Brett Messing, who's the president and COO of SkyBridge. And Brett, as we've talked about in this show before, sort of was a big force in getting us into the digital asset space. So I want to start with Brett. And just a reminder, too, if you have questions, we want this to be very interactive. Submit them via the Q&A
First of all,
button.
When it's going down, we give Brett credit.
Exactly.
When it's going up, I would like to take the credit. Okay, Darcy? I just want to make sure we understand.
So please submit your questions using the Q&A box at the bottom of your video screen on Zoom. We're going to get to as many of them as possible today. So please submit those questions there. We want it to be very interactive. But we're going to start, Brett, just with a sort of macro conversation around Bitcoin. So obviously we've seen massive volatility over the last week, but it accelerated this morning. Bitcoin touched a low of under 31,000, which was basically a 50% drawdown, slightly more than 50% drawdown from its peak at 63 plus thousand. It's not a new phenomenon for people that are long-term investors in Bitcoin, but I think there's a whole generation of investors in Bitcoin here that are newer to the game that felt a little bit of perspiration when they saw that big flush that we experienced in Bitcoin this morning. My first question is, was this pullback sort of inevitable? Is this just Bitcoin being Bitcoin? Or was this the direct result of everything that we talked about in the newsletter this morning and that you've likely observed with Elon Musk, coming out and saying that Tesla isn't going to allow people to buy their cars with Bitcoin? Is this all Elon driven, or is this something natural that was likely inevitable at some point?
No, look, I think Elon Musk contributed, I don't know, half of it. I guess just to take back, this is a normal pullback in the context of Bitcoin, right? You have a 50% pullback, even in the bull market. It happens once or twice every bull market. That said, the declines are breathtaking. They're violent. And for those people that didn't watch it real time, you're better off because of it. But look, there are a couple things. Bitcoin, let's not forget, since October, it's moved from 10,000 to hit a high of 64,000 with a Coinbase IPO. That Coinbase IPO could have gone one of two ways. It could have pulled a lot more money in, or it could have been your sort of classic, buy on the rumor, sell on the news, and create a short-term top. And I think that's apparently what happened. In the week or two before this, Bitcoin was having trouble moving higher on good news. And they say, at least in the equity markets, when a stock doesn't go higher on a flood of good news, you want to sell it. So I think that was concerning. And then you've had, the tech stocks have gotten, destroyed. And, people own Bitcoin in a lot of different ways. Some people, again, I'm an equities guy, think of it as like the next great tech stock. And during times of stress, it will correlate with the NASDAQ. So I think the tech stocks, and then you just had a flow of news where I would say Bitcoin was fragile, right? So there was an investigation of Binance, which is the largest exchange by U.S. government. China reiterated its sort of stance on Bitcoin. There was some news that it was new. It's not really new. But when you have a fragile asset or a fragile stock, this kind of stuff takes it down. So I think a correction was inevitable, but Elon Musk threw kerosene on this thing. And in fact, the violent bounce up that we saw, so I woke up this morning, it was 39, it went from 39 to basically 30 fast and then back to 39 fast because Elon Musk came out and said that, he tweeted that Tesla has diamond hands. And for those people who don't know, diamond hands means that you're a hodler and you're going to hold through anything, including the massive volatility. And what was missing this weekend, he sort of suggested that Tesla might be selling its Bitcoin. Bitcoin went down on it. Then he said that Tesla had not sold any Bitcoin. But what he didn't say was, we have not sold it and we have no intention to. And it was that ambiguity that was weighing on the market. And, I think him coming out and basically saying that, we're a hodler, and he credited the CFO of Tesla for that, I think is meaningful. But, and I'm going to let Anthony talk, damage has been done here, to the investor psyche. A lot of people who lost money, if you look at the on-chain analytics, it was a lot of new buyers who sold. So we're gonna trade around in a range. I don't know if that's 40 to 50, 35 to 50. I don't know what it's going to be, but we're going to grind for a few weeks before where I think go higher. I mean, my long-term view, in Bitcoin time, which is where I think we'll be at the end of the year, but certainly where I think we'll be in 5 years, hasn't changed.
Right, Anthony.
Listen. I mean, I think it's important. Well, I think it's important for us to go back to the fundamentals, because the original skeptics will say, well, Bitcoin's worthless, and so therefore it's going to trade to zero. Why is it trading up here? It's trading up here due to speculative frenzy. And so this was appropriate that it came down as aggressively as it did. The snapback now is probably just short covering, as people made a lot of money shorting it up in the mid 60s. That's the cynics' response to what's going on. And so I think what people have to understand, and they either get this or they don't get it. Satoshi Nakamoto, and I'll read it right here from my block clock. And I did love this block clock more, actually, when it was at 55, 65,000, 64,000. But what does he say here? If you don't believe it or don't get it, I don't have the time to try to convince you. Sorry, Satoshi Nakamoto. And the point being is, you either are going to steep yourself in the fundamental understanding of what Bitcoin is and what Bitcoin is doing, and the transformation that Bitcoin is going to have in our society, or you're not. And if you're not, you're going to be a loose holder of the coins. You're going to play them for speculative purposes, and you're going to create a lot of foam and a lot of froth at the top. My friend Dave Greenberg, who's been in the oil markets forever, texted me as we were starting here, and he said that he saw this happen in the Gulf War and 9/11, tremendous amount of flushing out of activity in the oil markets, as well as a flush out activity in the stock market. And it was a good flush out because it made for a stronger and more believable rally in the future. And so you don't want weak players in this market. And so what I think was happening is we rallied too much, frankly. You brought in a lot of foam and you created a lot of this violent activity. So Bitcoin at 39,000, I just want to take everybody back to Bitcoin at 28,000. That was the start of the year. How about early December, Bitcoin at 17 or 18,000? And so if you take a step back and you look at what's gone on over the last 6 months, Bitcoin has had this very, very powerful move. If it didn't move to 64,000, you wouldn't have this sort of hair on fire, people running around like crazy. I'm going to let Brett talk in a second, and you as well, John, but I just want to answer the Elon Musk question. I'm just going to give my opinion about the Elon Musk situation. Listen, I mean, I think the guy's a believer in Bitcoin. He's holding it. There's $1.5 billion position that he's holding on or thereabout. I think he's got pressure on him, though, because he's in the electric car business. He's getting a lot of subsidies from the federal government related to incentivizing more production of emission-free cars. And I think there's a lot of pressure on him. And so his decision and his calling it environmentally unsafe, and then we can debate the merits of that. And obviously, Brett and I think it's way more environmentally safe than people are suggesting. And just so everybody knows, Bitcoin's current carbon emission, its current carbon emitting contribution to the world is 0.13%. If we're right and Bitcoin transforms the financial services community and disintermediates tons of middle people, I want you to think of all those cars on the road going to bank locations or bank branches, all the lights associated with those bank branches, all the people that have to go there to work, and all the carbon that's emitting. Long-term Bitcoin will be very, very good for the environment. So to me, I think Elon Musk is in between a rock and a hard place. someone's asking, do we think Musk is actually serious or just a sociopathic genius? I want to answer that as well. I don't think he's a sociopathic genius. I think he's a genius. Is he a little awkward? He admitted on Saturday Night Live that he's got Asperger's, so he might be a little awkward. But I would never bet against this guy. And I don't think this guy happens to be betting against Bitcoin. I just think he's between a rock and a hard place. So I don't know what Brett's thoughts are there, but those are mine.
Brett,
I take Elon Musk at his words. You know what I mean? I'm hoping that
does it concern you, Brett, that one person could have that big of an influence? You said he was half of the move. Let's say that's true. Then he took $250 billion out of the crypto market. He was half the move.
So there's the good and the bad to it. So let's be sober about what's happened here. So the good news would be the Willy Woo spin, and what Willy, who's a very, very well-known, analyst in the Bitcoin space, has said. It indicates how nascent the asset class is, how early it is, and how much upside there is. And I think that's true. The other side of that is that Jim Cramer said that it's off-putting to institutions and could slow institutional adoption, right? Elon Musk, a genius, but he's mercurial. Some might characterize him as erratic. And do you want your P&L subject to that? You do when you invest in Tesla. Maybe you don't when you invest in Bitcoin. I think both of those arguments are valid.
So, Brett, there's two things that are happening right now amid this big drawdown. We are in this space, and we talk to a lot of investors about Bitcoin, and they tell us frequently, I'm waiting for a pullback. I'm waiting for prices to be lower. I don't want to be that sucker that buys it at 60 and ends up holding the bag. But if it goes down meaningfully, I want to buy. At the same time, you have this issue of one person being able to move the market as the way that Elon Musk did with his tweeting and some of his commentary. So if you're a CFO of a private or public company, or you're the due diligence team at a major bank, and you're in the process of considering Bitcoin as a balance sheet investment or loading a Bitcoin product onto your platform, are you now more encouraged that you're going to be able to get your investors in at lower prices? Or are you more concerned by the fact that the volatility still exists in an asset that's supposed to be institutionalizing and potentially seeing more depressed volatility?
I actually think that anyone who's looking at this seriously knows how volatile it is, right? And they've looked at the numbers and they looked at the history, and they expect the volatility, and they don't know what the cause of it was going to be. Let's say it was all Elon. It just happened to be him. And I guess there's just so the answer is no. I actually don't think it's going to be that off-putting. And let's just remember for a moment, this isn't just one actor, right? This is the richest man in the world, I guess, by some measure, who has an earned cult following, right, through his business career. I mean, just imagine what would happen. And there's a book actually by Bob Lee, who's very early player in the crypto space. It's coming out. He's promoting it and head of the Bitcoin conference. I was listening to a podcast with him, and he has these 10 predictions for Bitcoin. And one of them is that Warren Buffett's going to buy Bitcoin. Now, I imagine he's going to wait till Charlie Munger dies, or perhaps that will kill him. But what happens to Bitcoin if Berkshire Hathaway announces that they've bought $1.5 billion, right? So there are certain what I would call mega actors in essentially every market. And so I lean more towards the nascency. And I think, again, and we've said this over, if you're going to invest in Bitcoin, and we really think you should, it's really about sizing, right? Because, look, Bitcoin could, I actually expected us to get to 100,000 and then retrace back to 60. I had it built in my head that we were going to have a 40% pullback this year. Maybe that'll still happen. Maybe we'll have 2. But that's what you're signing up for. So just make sure that your position size is such that, you're not going to be the person who's, selling at the wrong time.
Anthony, do you have anything to add to that?
Well, I mean, I want to go to some of these questions if it's okay.
Yeah, let's move on.
Someone's asking about not wanting weak players in the market. Makes sense, but what's the opinion of the ongoing debate between Bitcoin and the growth of altcoins, such as Doge and Safe Moon, and what's your opinion? So, listen, I'm focused on Bitcoin. Brett and I are focused on Bitcoin. SkyBridge will introduce an Ethereum fund shortly. We'll have more details on that as it's about to transpire. We have other internet/digital asset products that we're going to be able to announce shortly. But at the end of the day, we're staying away from the altcoins, not because they're good or bad, but because we're institutionalists and we're trying to be the icebreaker up at the North Pole, breaking through the ice related to institutions. And volatility like this is a turnoff to some institutions, and to other institutions, it's a great opportunity. So to me, I want to stay with the one or two apex predators that are in the market. And so we're avoiding for now those coins. That's not to say that they're good or bad. Obviously, what I think is ironic about this whole thing, and Brett and I have said this repeatedly, prior to this debacle this week, almost Bitcoin didn't have enough juice for the Bitcoiners. They needed to trade the altcoins like Safe Moon and Doge, and they thought that Bitcoin was like a little bit too flaccid for them, I guess. I don't know. To me, look at the market activity, go with the apex predator, keep it simple, stupid. That would be my message. I don't want to be in eToys. I want to be in Amazon.
I would add something to that. So when Bitcoin is getting hit, right, we can't value it on traditional metrics. So there are a couple things we can look at, right? We can look at how many people are on the network, right? And we've talked about sort of Metcalfe's law, and how the price generally tracks through adoption, right? So we have a network with Bitcoin, right, with 100+ million people, and now large institutions that are committed to it, right, where it's on public company balance sheets and insurance companies. But well beyond that, we have tens of billions of dollars invested in this network, right, in the terms of capital expenditures for miners. And then on an annual basis, we have billions of dollars spent on energy, right? So this isn't just a computer code. There is this nexus between the real world and the digital world. And that, I think, provides a base level of value, again, untraditionally so, but makes it very different from the meme coins.
So, Brett, the basis of Elon Musk supposedly stopping the ability for consumers to buy Tesla cars with Bitcoin was concerns about the environmental impact of Bitcoin mining. And environmental FUD, fear, uncertainty, and doubt around Bitcoin is nothing new. It's something that skeptics point to very frequently in terms of why they think this won't rise to the levels that some people believe it will. Do you think environmental FUD is going to continue to be more of a topic of conversation among regulators, among institutions that are talking about adopting Bitcoin in a more meaningful way? Or do you think it's a little bit of a red herring?
No, I actually think it is an issue. I think that the green issue, and I wouldn't make it, we shouldn't pick on Bitcoin. I think this is true across all investment asset classes. I think, there was an article about how monetary authorities throughout the world, when they're investing their balance sheet, are taking green issues into consideration. So, I think it's a real thing. I think it's going to affect adoption. I think it will cure itself, because I think by the end of the decade, most energy is going to be renewable. So if you're using energy,
Right,
you're going to be using renewable energy. But there's a lot of progress being made to make Bitcoin greener. For example, there's a Bitcoin miner in Upper New York State that announced they were buying carbon credits to offset, whatever impact they're having on the environment. China has objectives, right, that they want to hit in terms of the cleanliness of their air. And Inner Mongolia, which is the largest region, I guess, in China, and one of the areas where there's the most mining, has not been hitting their objectives. So Inner Mongolia has banned Bitcoin mining, and they've actually taken it so far that they're paying their citizens sort of tips or bribes, to tell them who is doing it. if there aren't any mining in that region. If you get mining out of China, you're going to take a big chunk out of, certainly getting out of Inner Mongolia, you're going to get a lot of the sort of dirtier mining out of the system. So, one of the things they say about Bitcoin is that Bitcoin is anti-fragile. So when it gets attacked, it makes it stronger. I think that we'll look back, and Elon Musk will, in his own idiosyncratic way, have accelerated the greening of Bitcoin mining. So I actually think it's a good thing. I do think it may slow some institutions down that are really focused on green. But longer term, as I said, it's certainly not an issue.
So, Anthony, I have a question for you. It's around government and regulation. So, in the context of everything that's been happening with Elon, which has gotten a lot of the headlines, India came out today that their central bank is basically encouraging banks and financial institutions in that country to stop doing business with crypto exchanges and traders. That's in spite of a Supreme Court ruling in 2018 that allowed Indian financial institutions to deal with crypto companies. But the government, ahead of potential formal legislation, is telling people, don't do business with these people. There's regulation coming. In China, as Brett mentioned, there's some noise around them sort of broadening their bans on crypto trading, custody, things of that nature, despite the fact that 60 to 70% of global Bitcoin mining takes place in a couple provinces in China. Do you think part of this is just increased fears about potential adverse regulation?
Listen, I can give you a whole list of fear, uncertainty, and doubt on Bitcoin. And then we can step back and we can look at Bitcoin's move over the last 12 years and say, wow, well, why did it do that? Because there's so much negativity and so much FUD out there. Why would Bitcoin actually move directionally despite its volatility? It's been primarily asymmetric volatility. And the answer to that is because it works. The answer to that is that it has 3 or 4 universal properties that the world has looked to towards value, storage of value, and the transfer of value. What are those things? Well, number one, it's immutable. You're not going to be able to bust the blockchain, or you're not going to be able to subvert it. Number two, it's becoming a trusted, scalable network. I think is super important. And number three, and you got a lot of jokesters on Twitter and a lot of television pundits saying, well, how could it be a store of value if it's moving 25, 30% a day? It's clearly not a store of value. But if you step back and you look at the broader picture of it, it actually has been a store of value. And if anything, it's been increasing in price as there's a proliferation and greater production in fiat currency and more inflation. So again, just step back, 28,000 at the beginning of the year, 39, 40,000 right now. It's asymmetric in terms of its movement long term if you're willing to step back. As it relates specifically to China, China has a specific policy reason why they want to keep a closed economic society in China. They want to stay in power. Everybody on this call knows that we're cheating history now with China. The Chinese Communist Party is controlling those 7 balkanized provinces with an iron fist. Everybody knows that one-party systems typically only last 70 years. We saw what happened with the Soviet Union after 70 years. The Mexican one-party system ended after 70 years. Japan, the same thing. Malaysia, a few years ago, that party turned over. Singapore has had its issues. And so the Chinese are trying to keep it together. And one of the ways to keep it together is to close the system. And if you digitize the yuan and you put it on people's smartphones, and then you don't like their behavior, and all of a sudden their yuan disappears on their smartphone, you have a tremendous amount of control. If you're putting Bitcoin into the equation and its libertarian decentralization, that's not a great thing for China right now. But conversely, the other side of the coin is, to your point, they're mining a ton of Bitcoin. And so my guess is at some point they have a long-term, they're very long-term thinkers, they have a long-term cohabitation strategy for the digital yuan and Bitcoin. Otherwise, I don't think they'd be doing that massive amount of mining. That's my opinion.
Right.
India, I think, is a separate thing. Tremendous democratic bureaucracy there. And I think that, you've got an old guard, older people demographically trying to hold on to the past as the future is accelerating.
So, Brett, we have a couple questions in the chat. We alluded to the idea that weak hands are being shaken out, and that could be a positive thing long-term for Bitcoin, some leverage coming out of the system. We have a couple questions. So when Bitcoin sort of fell back to earth in 2017, 2018, after that initial bull rise, when it rallied to near $20,000 per coin, you saw a preponderance of ICOs and altcoins, we'll call them, popping up when Bitcoin was rallying and was very strong. And then when you had the washout in Bitcoin, it led to basically the extinction of a lot of these altcoins and some of the really excessive speculation that took place in the crypto space. Do you think, first of all, that Bitcoin is going to be stronger for this pullback? We talked about the idea of measuring, network effects based on adoption on the Bitcoin network as opposed to price. And do you think that we'll have a massive shakeout in these, safe moons and Doge coins and Shiba coins and all this just rampant speculation that's taken place sort of around the growth of Bitcoin?
Well, yeah, look, with respect to Bitcoin, if we just scope out for a second, and I like to say follow the news, not the price, which not that I follow that, but I try to take that perspective. So what's happened in the last week? Bitcoin's gone from 54,000 to 39,000. Elon Musk said that Tesla will no longer take Bitcoin for cars. They didn't have anybody buying Bitcoin with cars. Okay, I was going to do it just for fun. Okay, but no one was doing it. He said they're not selling. Today, UBS announced that Wells Fargo announced that they're about to roll out a product to all of their wealth management. And again, just remember, as each one of these banks has it, everyone has to have it. More network effect, more validation of Bitcoin. Excuse me. And as you just discussed, India was going to ban it, and now they're just looking to regulate it, which is a step in the right direction from a regulatory standpoint. So, I think Bitcoin will emerge stronger from this. I think this is just, market noise. Again, these various meme coins and the altcoins from years ago, the ICOs that you refer to, you have to go back and look at how much money is invested in them, meaning supporting them. How secure are those networks? How many developers are working on them? What's the use case? And, there are in Dogecoin, for example, and maybe this is changing, right, as given Elon Musk support, but there are four guys working part-time to maintain Dogecoin. That's it, right? And so, and it actually trades on the Litecoin protocol, right? So it doesn't even have its own system. Now, look, could it get morphed into something else, right? I'm pretty sure Viagra wasn't developed for its use. Maybe there is a secondary use for Dogecoin, but again, unless these various other coins.
Well, if you're saying that Dogecoin has the effect of Viagra, well, I'm just letting everybody know that we may end up with a Dogecoin fund. I'm just
the FCC is going to censor this salt
just
talk.
Wanted to just point that out. I don't know if the FDA is approving that or anything, but I just want everybody to know that that's where we're going. All right, go ahead, keep going. I'm sorry.
Look, I think that these very other coins are going to have to prove they have a use case, right? Bitcoin has a use case. Ethereum has a use case. A lot of execution risk, but big opportunity if they execute on it. It isn't clear to me what Shiba coin. I don't know how to pronounce it. Like what the use case is for it, and if there's no use case, then it will die like the other 6,000 cryptocurrencies that have come and gone. And if there is, it'll survive.
Yeah, Dave Portnoy of Barstool Sports, to bring him into the conversation because we had a few questions about him. But there was a great Bloomberg newsletter yesterday morning. Joe Wiesenthal wrote it. He hosts the Odd Lots podcast, which I would highly recommend. But he basically said that all these altcoins have been created, not to use the P word, but as Ponzi schemes. It's basically the idea that if you can get in early, even though this has no use, no practical use, and no real use cases, that you're going to make money because people are just speculating in a very frenzied way. And Dave Portnoy came out and said, I'm going to back SafeMoon. He randomly picked one of the altcoins and said he's going to turn to an influencer on SafeMoon just to demonstrate the idea that it's sort of a Ponzi scheme. So I think the timing of this shakeout, people are calling it the Portnoy top, if you will. But moving on from that, so we have a few questions about price targets, and we've generally tried to avoid putting price targets on Bitcoin because we think, while it generates headlines and might give people guideposts, it's sort of unnatural to have expectations on where the price of Bitcoin is going to trade. But we do have a couple questions about, what does this do to revise your price targets for Bitcoin by the end of this year, by the end of 2022? Brett, does this sort of dampen your expectations in terms of price, over the next couple of years?
No, not at all, because the fundamental story hasn't changed. There are, at the end of this month, there will be more people in the Bitcoin network than there were last month. And that'll be true at the end of June as well. In fact, just this weekend, I was able to buy Bitcoin on Venmo. Unfortunately, I paid like $50,000 for it, but it showed up on my phone, and because they're rolling it out, I guess, in stages to their various users. So that'll be just another way for people to get access to Bitcoin. So no, there's really, as I said, there's been no fundamental change except the price. And I do want to take credit for this. People have been saying that as Bitcoin gets institutionalized, that the volatility is going to decline. And I have said I disagree with that. And at least for today, I would say I'm right. But I've also said that the volatility is our friend, because while the volatility can, and I'll be the first to admit it, in a breathtaking way, take it from 43 to 30 fast, it can also take it from 40 to 100 fast, in the way it went from 10,000 to 64,000 over a span of 4 months. So no, my thoughts on where I think Bitcoin's going this year, and at the end, I think about it this year, and then where might it be in 25, let's say 4 years from now, because we have another halving. Just a reminder to everyone, every 4 years, the amount of Bitcoin that the miners mine on a daily basis is reduced in half. And it will be reduced from 900 new Bitcoin a day to 450 new Bitcoin a day in March of 2024. And we tend to get these big moves after that sort of supply shock.
Right. And to cover another big piece of news that came out this morning, Wells Fargo now plans to add a crypto fund to its platform, talking about the growth of those network effects that you were alluding to earlier. And I want to go back to that earlier question that I had. Do you think somebody like Wells Fargo, they probably made this decision over the course of several weeks or even months in terms of should we or shouldn't we add Bitcoin funds or crypto funds onto our platform? Do you think this volatility is going to maybe dissuade people like Wells Fargo or others from bringing these products to their clients?
I don't at all. Again, I think if I'm Wells Fargo, I'm happy. Goldman and JP Morgan have announced products which they haven't rolled out. And, their clients are going to be able to buy it maybe under 40, maybe in the 40s, which is better than buying it in the 60s. This volatility, this kind of a pullback has always been what Bitcoin is, and until it matures materially, it's what it will continue to be. And so, and the other thing about these banks is they have inertia. It's really hard for them to get going on something, but once they get going on something, it's very hard to get them to stop.
So, Anthony, I have a question from the chat that I'm going to extrapolate into a broader question. So the question was about BlackRock. BlackRock is the largest asset manager in the world. They're talking a big game on ESG and integrating ESG into everything they do with all of their various products. And there's also this notion that Tesla, they cited environmental concerns for not letting people buy cars with Bitcoin, but there's also a notion that they're entering sort of the carbon credits game and obviously get a lot of government subsidies around their multiple business lines. Do you think that the ESG factor, you can talk about the BlackRock piece, and also, from a government regulation perspective, you think there's going to be continued pressure on asset managers to, consider the ESG elements of Bitcoin?
No, I think the short answer is yes. But the longer answer is people really need to do the homework and need to understand the percentage of renewable energy that goes into mining and keeping the network and the systems together and the transformation. And then the secondary issue is, well, if you're going to do that, well, then what about GM and Ford? And what about banks? Banks are emitting a tremendous amount of carbon. What about commercial office buildings? They emit a tremendous amount of carbon. So are we getting out of the real estate business, the automobile business, the banking business? I don't know. For some reason, it feels like we've got a target on Bitcoin's back because it's a new idea, and there's a lot of people that want to maintain the principles based on the old guard. And so here's what's going to happen, whether people like it or not. Our 70, 80, and 97-year-old business leaders are going to age out of the economy. And there's a very large group of people that are your age, frankly, John Dorsey, that are going to age into the economy and are going to take leadership positions and regulatory positions. And it's the same way that cannabis and pot smoking was illegal 35 years ago. And I see Darcy smiling. God only knows how many bongs you've taken a hit from. We can talk about that later, of course. But the point is now it's legal. And so what's going to happen is, yes, you have that stuff going on. The bell curve of the demography is going to move, and people are going to be in Bitcoin. They're going to be in it in size and scale. And we would like our clients to be involved with it now. Despite the volatility, I'm a buyer at 64,000. I was a buyer the other day at 40,000. We bought some today in the low 30s. But all those prices, 64,000 to 32,000, I think are going to be very good long-term marks when we think about it over a 3 to 5 year period of time. So what's our price target? I said on CNBC, we are comfortable in our idea that Bitcoin is going to get to $100,000. And that is based on Metcalfe's law and the exponential effect of more users coming into the network.
So, Brett,
I wanted to add something on the Musk thing, and so someone very smart said to me that this is the three-dimensional chess game that he's playing. Tesla actually makes more money by selling environmental credits than they do from cars. So, because they're a clean energy company, the government gives them these credits and they sell them to other companies that aren't clean. So one of the biggest buyers of their credits is the newly named former Fiat, the maker of Fiat. I can't remember the name of the company, who paid them, I don't know, like $300 million last year. And that company has said that they will no longer need to buy credits from Tesla. I think this is true of a number of the buyers of these credits because right, this greening is going on everywhere, right? Everyone is focused on it. So there's a suggestion that that Elon is trying to put pressure on either regulators or the mining community to end up buying credits from him, that he needs new buyers for these credits. So it's an interesting three-dimensional chess. Who knows? We'll find out. Again, I think the longer-term story here is that Bitcoin will become greener from a mining standpoint, and if Musk's sort of temper tantrum sort of helps that, then all the better.
Yeah, and Anthony made a comment on Twitter to that effect. There's a really interesting question from Nick in the chat, and this is something that Elon actually addressed in one of his, if you want to call them tantrums, Brett. Peter McCormick, big in the Bitcoin community, friend of ours, basically pushed back on Elon's FUD around the environmental issues with Bitcoin. And one of the points Elon made in response to that was the idea that Bitcoin isn't as decentralized as people make it out to be. And he's pointing to the fact that 60 to 70% of Bitcoin mining takes place in China and really in a couple provinces in China predominantly. Is this a misunderstanding that people have between nodes and mining nodes? Or what do you say to the idea that even as we get diminishing returns on Bitcoin rewards as part of the halving, that this could become even more centralized?
No, look, Bitcoin is by far the most decentralized network. There is probably a little over 50% of it is in China. China is a pretty big country. It's spread throughout China. He pointed to there was an incident in one province where all the miners in that had to go off the network for a couple weeks, and the computing power went down around 20% on the network, and then it was up a few weeks later. And that's the beauty and the power of a decentralized network. Is actually, if you want to talk about, someone asked me yesterday, what's the single best news that could come out for Bitcoin? And it actually, in my mind, it isn't Warren Buffett buying Bitcoin. Is if China banned Bitcoin mining and every Bitcoin miner in China stopped mining. Okay, that would automatically make Bitcoin much greener, because a lot of the dirty mining comes out of China. The network would just keep chugging away, to the extent that people are concerned about the fact that so much mining is done in China. That would go away. This is an incredibly decentralized network, and there's no way to harm it because of how spread out it is. He was just wrong, and I think that was, Twitter got sort of nasty, and I think it felt like Elon didn't like Bitcoin Twitter being mean to him, but it takes a lot. Look, you got to spend a lot of time on Bitcoin to really understand it. And Elon Musk runs Tesla. He runs SpaceX. What's that burrowing company? The Boring Company. This guy just doesn't have the time to know Bitcoin the way Peter McCormick does. And that's okay. Yeah, but I'm hoping that he will take the time and get educated, because I think he has a lot to offer.
All right. Well, we're going to start wrapping it up. We could talk for 3 hours about everything that's happened in Bitcoin and cryptocurrencies over the last week or so, even going back further than that. But we're going to wrap it up. But I want to give you each a chance to sort of just provide your closing macro comments on Bitcoin again, sort of the way we led this. And Anthony, why don't we start with you? To people that maybe are long Bitcoin or considering being long Bitcoin, why do you think it makes sense to lean into this pullback that we've had?
Well, again, it's about either having the understanding or not. If you're buying it for speculative purposes and you believe in the greater fool theory, you're going to get burned, because when you get a volatility downdraft, you're going to get scared out of it. But if you take the time and you do the reading and you do you steep yourself in the understanding of the fully robust, decentralized monetary and storage of value network that's being created, you won't be shocked by the volatility. And again, think of Facebook down after its IPO. Look at its price performance over the years. Google down after its IPO. Look at its price performance. You've heard me talk about Amazon. I'll repeat myself. Amazon, $10,000 on the IPO, $21 million today, 24 short years later. You would have had to go on through at least 8 downdrafts of 50% or more to have gotten that performance. So if you want a transformative, impactful thing to your portfolio, and you have 1-2% of your money in Bitcoin, and we're right, you're going to be very, very happy, but you're going to have to hold the position because the volatility is not a bug, it's a feature of this. And that volatility over the 12 years has been predominantly asymmetrically upsided volatility. And so that would be my message to people. This price shock was expected, and there'll be more price shocks, but I think there's better days ahead long term. And take a step back and look at it from a long-term view of a chart.
Brett?
Yeah, I would just add 2 observations. One is, we've reached a tipping point. I mean, this is happening. We've had the Coinbase IPO. It's an incredible business. Every bank is rolling out a Bitcoin strategy. Every vertical type of investors we've discussed, endowments, insurance companies, pension funds, hedge funds, large investment managers are investing in Bitcoin. And I think, just going back to the banks, the thing that I find fascinating is it's being pulled. Okay, so Wells Fargo didn't concoct this. Their clients want it. So their FAs are asking for it. And that's what's happening at Merrill Lynch. That's what's happening at UBS. And then when they respond to that client demand and they roll out the product, they validate Bitcoin further. And then that furthers a network effect, and so on and so on and so on. And so, it's impossible to predict the very short and even intermediate movements in Bitcoin. But as long as that dynamic is unfolding, I think you want to own this asset. And so.
Well, there you go. Hopefully you'll join us again next week. It'll be interesting to see the price of Bitcoin. But as we've emphasized here on this call and in the past, we really think if you're a long-term investor in the space, price, it's not necessarily an illusion, but it's not the most important thing. I think price has been useful certainly in driving some of the institutional adoption. But as Brett said, sort of the horse is out of the barn here when you have every major bank offering Bitcoin buying integrated into their core wealth management services. So thank you, everybody, for joining us on this week's SALT Bitcoin review. Reminder, if you have any further questions, you can email us at bitcoinir@skybridge.com. Again, that's bitcoinir@skybridge.com. We definitely had plenty of conversations with people over the last 48 hours as Bitcoin's volatility has ramped up, and we're happy to have plenty more of those. So if you want to talk through in a more private setting with a member of our team, again, please email us at bitcoinir@skybridge.com. We're happy to have those conversations. But on behalf of Brett, Anthony, and the entire team, thank you guys for joining us this week. We hope to see you back here again next week.